In this video, we want to talk about Apple, and the question we want to answer is it too late to buy Apple? Before we get into some of the cases that say it is, I do want to look at the technicals. So this is the weekly chart, and you can see that we had a great buying opportunity when price crashed back in early August. Why did it stop here? Well, when you look to the left, these were previous all-time highs. Now, one thing I want to note is this weekly buy level. On top of another weekly buy level. Now, the formation is the following: rally, base, rally out, base, rally out. Price nearly came back into that zone, depending on how you draw your upper portion of the zone. It either hit, but I like to draw my zones like this from a conservative standpoint. Now, Apple has been one of the stocks that have held up pretty good based on other tech stocks in recent weeks. Now, scrolling down to the daily chart, I want to look at this, what was previous highs, right? Should serve as support potentially. Now, one thing I don't like is that we did not make a higher high, right? We made a lower high. So this tells me that there's weakness in the price action. And based on the fundamentals, based on September being one of the worst, if not the worst month historically, we could potentially see some more downside risk. So is it too late to buy Apple? Technically, no, it's not. The prices are still trading at near-time all-time highs. However, if you get a sell-off, a continued sell-off, and back to this $200 level, which would coincide with roughly that 200-day moving average, that would be a nice opportunity to buy some shares. Now, here's the base case for it is too late. So Apple's track record of compounding investor capital is unbelievable. Past 10 to 20 years, let's just go with the 20-year period, it's up 36,000%. Apple raked in $386 billion in revenue last 12 months. Market cap has a $3.5 trillion, making it the most valuable enterprise or company in the world. Now, there's roughly 2.2 billion Apple products out there. So it's mature relative to where it was 10 to 15 years ago. And with such a massive revenue base, it becomes increasingly difficult to drive strong top-line gains, right? Law of numbers. Law of numbers. Apple reported a surprise 2.8 year-over-year sales decline. But it's all about the services, right? We get into this Apple hardware, or is it a software company? Now, the bright spot when it comes to growth has been the service division. Offerings like Apple Pay, Music, and TV Plus, to name just three, help propel 14% year-over-year segment growth. And the margins of 74%, it's not bad. But even with the rise of services, Apple's growth isn't going to be anything to write home about. The business is projected to increase sales and earnings per share at a compound annual growth rate of 5.9 and 10.9%. That's significantly slower pace than the previous 3 years. Now let's talk about a valuation standpoint. It's fairly rich relative to historical numbers. Trades at a P of 34.4. That's 20% higher than the 5-year multiple. It's 43% more expensive than the S&P 500. Investors will likely see poor forward returns if they buy the stock when the company's valuation is too high. Again, assuming Apple's PE ratio comes down to its past 5-year average, coupled with the previous mentioned 10.9 EPS growth, and you get a forecast annualized growth rate of 7%. So, is it too late to buy? It really depends on your financial objectives, your time horizon, and your risk tolerance. The chart suggests wait for price to pull back a bit more. best buying level is going to be down at this $200 level. Thanks for watching. Subscribe. Please like the video.